We talk about the explosive rent growth in a high inflation market. Now, inflation is at the highest rate in the past 50 years. People need to understand, especially real estate investors, when you buy a cash flow properties, even though the cash flow may not be as high as you would like because of a skyrocketing of appreciation, and the rental rates always lags behind the appreciation rate. So having said that, this slide clearly indicates that whatever the inflation rate is high, the rental rates increase will correspond to that as well. If you look at a chart in the past 50 years, the inflation and the rents has been pretty normal until you hit around 10, 15 years ago. There's some fluctuations, but let's focus on the past 10 years with some stable inflation, stable rental rate increase, 3 to 5%, whatever. Then the pandemic hit, as you can see, 2020, we have seen some low supply inventory, inflation behind. Look at the rental rates throughout the country has skyrocketed, double digit, triple digit in many markets in a year ago, 2 years ago, including Florida, have a lot of rental rate increases because the influx of people moving to Florida during the pandemic and even currently and moving forward. Investors buying even right now in Cape Coral market, your rent will to go up based on inflation. That's a good sign. With that in mind, Justin, what is your takeaway?
The first thing I'd be curious about, there is a small dip there in 2020 where it showed rent going down. I'd be curious to see the breakdown on that of rent from large cities to rent in suburban environments like Cape Coral. I can tell you without a doubt, rent did not go down in 2020 in Cape Coral. That's a suburban area. People were moving to Cape Coral, rent skyrocketed. I would guess that dip is heavily influenced by large cities, New York City, DC, LA, where people were leaving as quickly as possible. Not areas like Cape Coral when we start looking at a local example. That's the first interesting thing I see there. The second part of it, I can tell you 100% of the time when a lease ends and a tenant renews, I have never once not increased the rent. The rent has always gone up. Might be $50 a month, might be something small. It has always gone up here in Cape Coral. During periods where a tenant may move out of a home at the end of a lease and we place a new tenant, I can tell you the rent typically goes up significantly more than if we renew. Sometimes, and we have some examples of a tenant chooses to move out, we release it $300-400 a month higher just because that's where the market standard is at that point. Very strong numbers supporting over time, rent will continue to rise. Your costs are very fixed with that mortgage, and we just continue to increase that cash flow year over year.
Yep, I agree, Justin. Hold that thought. The graph I just shown, those statistics, those rental statistics, I believe I've done a lot of research on this, and a lot of people out there, they got it wrong. Those data, like you said, are mainly derived from apartments, multi-units, renting on the major cities. Let me tell you one thing that 99% of the people do not understand. With respect to single family home rental data, there's no data out there will have a clear cut or from a nationwide perspective that show any kind of data like this. I say it again, single family homes or even duplex and fourplex, this cookie cutter rental homes, there's really no national consistent data to show the percentage rent increases and decreases. How do people know about the rental increases with respect to rental or single family home rental? They have to go to a local market. They have to go to a specific local market. They have to talk to the manager to look at the 2 or 3 mile radius. Or, you know what software I use, which I share that with you from time to time. I use Rentometer. This software gives you a real time, for example, if you want to do a 2 mile or 5 mile radius, you input the 3-bedroom, 2-bath in a specific area, and then the rental meter will show what has been the rental rates on a monthly basis in real time up to today. Those are the best localized rental data for single family home rentals. Yeah, I just want to put that in. But the big picture, yeah, on that, I agree. If risk investors, the cash flow may not meet your expectation moving forward, at least on a first year projection, but you must understand as a long-term investor, you expect to raise your rent in line with inflation. With that in mind, let's go over 2 more slides. This slide are important from a big picture. It's clear that ever since the last real estate crash back in 2008, starting from 2008 until now, really for the past 15 years, there's a shortage of homes The builders are not building enough homes. There's not enough homes based on demand. And this graph clearly indicates for those of you out there think there will be a real estate crash. I mean, it ain't gonna happen because the job report, we have more jobs. The unemployment rate, the nationwide unemployment rate is only 3.5% of people are not working. Job report is even in a recessionary period, potentially. However, you look at this graph from Alto's research, look at the single family homes statistics. Goes back to around July 2015. We're talking the past 8 years. We need about 2 million homes. You look at year by year on it's trending downward. The supply of inventory has trending downward year over year up until now. Now, some of you are thinking, how come it's high here and low down here? Well, I'm sure it's a seasonality. Toward the last few months of the year, now we always have a slight downward trend. But look at this low supply of inventory to a point where we are, and even though many markets in past few months, we have a rise of inventory, but a rise of inventory compared to 2021, which is have a historical low amount of supply of inventory. Even with high supply inventory, up to around almost 500,000, we need way more than 1.5 to 2 million homes to have a balanced market. Look at the downward trend. January 2023, we still have a low supply of the inventory, around 3.5% supply of inventory nationwide. And the balanced market is 5 to 6 months. Clearly, even though there's a national chart, your local market, Cape Coral, Southwest Florida, is similar, if not worse, in terms of lack of supply of homes. When the pent-up demand, especially when the mortgage rate hopefully goes below 6% in the next 2 months, we're getting closer to a less than 6% mortgage rate. So we're going to see a pent-up demand. And when a pent-up demand, when spring season right now, people are motivated to buy homes. We have seen some bidding wars in select housing markets in the country that could be similar in Cape Coral as well. Definitely there's no real estate crash absent any bad situation. What do you take away on this particular graph, especially in relate to your market, Southwest Florida, Cape Coral? What are your thoughts on that?
The downward trend of available inventory is even more drastic in Cape Coral. Go back a couple of months, there was a major hurricane here. I can tell you, even myself, there are a number of contractors from out of state who have rented homes because it's less expensive to put contractors or other different workers into a home than it is to keep them in a hotel. They're expected to stay here, depending on the trade, for 2 to 5 years. What little inventory we have for local families and people who live here was used up even quicker because now we have all of these trade workers who are also trying to get homes. We had a home on the market last week. Took 1 week. I had 6 applications submitted and it's being rented. Took us a week. I mean, there's clearly not enough rental homes to meet demand right now. That getting 6 applications that quickly is not normal under any circumstances. That's extreme demand for not nearly enough supply.
I totally agree. Let me segue into the final slide I have, and then you can, I'm going to do a pro forma. This pro forma cash flow analysis is a batch of inventory that you're working with a builder locally. They're promoting this particular home. But before you do a deep dive into this home, when I did my calculation on my software, these numbers, you couldn't ask for a better number for a real estate investors to buy something like this. So let me briefly go over the high level, the numbers, and you will validate what I'm saying, as well as why right now the builder incentives, why are still happening. Some will go away. I believe when the pent-up demand, when more buyers are entering the market, because right now the spring season is really, really hot, not only in Cape Coral, but other areas of the country, we are seeing a lot of pent-up demand. People are getting off the sidelines. So as a real estate investor, right now, the competition is not that high. Perfect time for you to do a great deal with the buyer incentives and what have you, pay down the mortgage rate. For those investors that wait too long, if they can wait 2 more months later, guess what? When all the pent-up demand is going to occur, there'll be more competition out there, and you'll be competing against another investor or another homeowner to buy this high quality cash flow, limited amount of homes. You can get involved in a bidding war all over again. I'm not saying the bidding war is gonna push up your price double digit in appreciation. The bidding war will be, 3 or 4 or 5 offers per house in a few months from now. If what that would happen, but the bidding war is not gonna, achieve tremendous asking price above and beyond the selling price. So we're not gonna expect skyrocketing appreciation at least for the next 2 years for the time being. But right now, if you look at some of these opportunity with the builder you work with, Justin, here's my calculation. Okay, I mean, give or take, this is just a projection. A single family home, brand new construction in Cape Coral is only 325,000. Nice cookie cutter, 3 bedroom, 2 bath, brand new. You put 25% down payment. You buy down the rate with the builder incentive. You can buy down the rate all the way down to 5.75% on my projection here. Now, it all depends on what kind of loan program you do as an investor, but I'm just using a projection. So your down payment, 25% down, 81 grand down payment. The rent, look at this rent, $2,300. I challenge any investors out there, you can buy any rental properties where for this price, 25K, and getting a nice, healthy $2,300 monthly rent. And then you minus vacancy loss, you minus monthly property taxes, insurance, and 8% property management fee, and your mortgage at 5.75%, 30-year fixed rate mortgage, which is 1422. At the end of the month, your projected monthly cash flow is a little bit more than $200. Now, you cannot ask anything more than this. And I also projected 5% appreciation rate annual and year over year. The numbers on the upper right-hand corner, I'm not going to go over, the numerical formulas. The rent to value ratio is very nice. Capitalization rate exceeds the benchmark, cash and cash returns, the whole 9 yards. What more can you ask for? This is just a first year projection. Buying a rental property, as I educate many of my members and other YouTube subscribers out there, a rental property is a multi-dimensional asset class. You benefit 5 different ways: rising cash flow, passive income, the renter pay down your debt and your mortgage over time, you get appreciation potential year over year, historically 5%. Then you get tremendous amount of tax benefits. You get to leverage. You get to get a amazing 30-year fixed rate mortgage where you're gonna outsource someone by the name of a tenant, gonna pay down your mortgage. What more can you ask for? So this is one of many opportunities you have right now. The window opportunity is very small because builders very soon, I could be wrong, Justin. You tell me, your builder, what's going on out there. This builder's incentives can go away once the demand will skyrocket for home buyers out there in the next few months as we are heading into the spring 2023 buying season. So what's your takeaway on this pro forma? Not only that, what kind of building incentive you're getting, what are the value play, what are the all those kind of things that savvy investors, they must look at this data and make an informed decision right now.
We'll take this in 3 parts. We do have 3 different markets that I still think are phenomenal. They're great opportunities. First one would be from the pro forma you just showed, which is North Cape Coral. There's a neighborhood called Gator Circle. They have 3 bedroom homes, that low 300s. 4 bedroom homes go up just slightly, still low 300s, puts you right around 330, 340 for a 4 bedroom home. Rent's 2,200, 2,300. Demand for the rent is off the charts, which is the most important part. We're going to have very, very low vacancy. The appreciation potential is there. When you're buying a home 25 minutes from the beach in the low 300s, there's only so much it can go down. Eventually, it's going to go back up quite a bit in some cases. Rental increases, still, you saw the last 4 years worth of history. It's going to continue to go up over time. There's great opportunities. They are offering up to $15,000 in closing cost assistance if you use the lender that's in-house for the builder. So great opportunities there. The next market that is also very good, we've had a lot of success in, is LaBelle, Florida. They have 3 bedroom homes in the high 200s right now, probably around 280 or so. 4 bedroom homes, they're about $10,000 to $15,000 more, so still in high 200s. Rents were at $2,000 to $2,200 a month. Really, really strong rental rates. And our vacancy in LaBelle has been phenomenal. Very rarely have homes come available. And when they do, they're filled very quickly. There's just not a lot of rental inventory at all in LaBelle. LaBelle is about 85 to 90% owner occupied. So rental opportunities are few and far between, which is why when we do go for rent, we got a great rental rate and a ton of demand. Same thing in LaBelle, they're offering up to $15,000 for using their in-house lender, including cost assistance. Final opportunity would be South Cape Coral. That's the market we worked in the longest. Prices are hovering the high 300s, low 400s right now. Three-bedroom homes right around 380, 385. Four-bedroom home puts you in the 390s. Highest price, largest investment, certainly the highest rental rates. You were getting 2,500 for three-bedroom homes, about 2,700 for a four-bedroom home. So great rental rates there, great cash flow. But here's the biggest thing in that market. You go with particular homes. They only make this available for certain homes that are available. But if you go through the in-house lender, they're getting this was 2 weeks ago, so we have to check on the exact rate. They were offering promotional interest rates at the time of 6.25%, as well as another $15,000 towards closing costs. Really strong opportunities there where they're giving you a promotional interest rate a little bit lower than what you would get elsewhere. And they're giving you money towards closing costs for using their lender. Long-term potential on these homes is phenomenal as we continue to see rental increases, as we continue to see appreciation go up in all three markets. If we look at the oldest home that someone from the real estate network has purchased, the performance is phenomenal. You're not going to find anything else like it.